Today, Ben and I will be breaking down some yield estimates along with some infrastructure and general supply chain hiccups that are impacting the markets. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Doing well. How are you this morning, Will?
Doing all right. It's been another hot week here down here in Texas. I think yesterday it got up to like 103 or something like that, and it's probably going to get up to about the same again today. So it doesn't change much.
Yeah, it was beautiful in Missouri yesterday. Students are back. The buzz on campus is alive, and we had good weather to kind of help welcome our students back to campus.
It's always an exciting time. I know the semester's about to start down here as well. So looking forward to the influx of students and all the influx of traffic that brings as well. I don't know. I start to feel like an old man when I'm like, the traffic. But talking about some things that are a little bit down on the week, looking at some price changes here real quick, Ben. September corn was down 5 cents at 378. December corn contracts down 1 cent at $4. September soybeans down 15 cents at 9.56. November soybeans down 10 cents at 9.76. Soybean oil on a cents per pound basis down 1.01 cents at 40.47 cents. Soybean meal for September by the short ton up $5.70 at 311.70. That 2024 September wheat contract down 8 cents at 528. July wheat for 25 down 7 cents at 589. Cotton for October down 0.31 cents at 67.98 cents. December cotton down 0.39 cents at 68.68. And then that West Texas Intermediate Crude Oil contract dropped $5.29. Pretty hard loss there at 74.37. So Ben, what's been the real shift around the week? I know we've had some yield monitoring going on right now and a crop tour, but what's been impacting the markets?
Yeah, so I think it's helpful to remember that we take these weekly changes, the ones you just read, we take those as of Monday's close. So right after the markets close on Monday from the previous Monday. Yesterday, that probably doesn't reflect the gains that we got during the day yesterday in the new crop corn and soybean markets. The Pro Farmer Crop Tour is happening this week. We kind of keyed this off last week a little bit. But certainly, the market was seeing maybe not as optimistic yields in Ohio and South Dakota as what USDA has been forecasted. That allowed the markets to move higher kind of during the day yesterday. The official reports came out, the market kind of digested it and maybe a little bit unimpressed during the nighttime trade window, but certainly as we look today and maybe through the rest of the week, that crop tour is going to be getting into what we intend to be some very large production yields. Or expect to see is record large production yields. So the worst maybe is over. The worst was probably yesterday and maybe a little bit this morning or on Tuesday morning, but I think better yields as we move through the week.
Well, not only better yields, but looking at recent crop progress numbers, they remain strong up in the upper 60s for both corn and soybean. So it'll be very interesting to watch exactly how this crop finishes out over the next month and a half or so. But Ben, I want to look at some logistical issues that we're facing in North America, both in Canada and the U.S. Canada, we're seeing some rail strike potential coming this week, and then Mississippi River issues a little bit closer to home. But let's start with that rail strike. The Canadian Freight Rail Network, as you've written about, it could come to a halt. So what would that look like, and how likely is that to come into fruition?
Yeah, so we foreshadowed this, I don't know how many weeks ago. Maybe it was a month ago that we talked about
I think
this
it's
being
3 weeks ago or so.
Yeah, I can't remember exactly how many weeks, but we talked about this being a potential this past Sunday. That took another step towards becoming reality for the Canadians. So there's two major rail networks now in Canada, Canada National, and then Canada Pacific, which merged with Kansas City to become Canada Pacific, Kansas City. Both of them have rail networks in Canada as well as the United States. The Kansas City Canada Pacific network also includes some operations in Mexico. The unions for Canadian workers and the railroads have been at odds. And on Sunday, the railroads announced potential lockout, or that they were moving forward with a lockout this coming Thursday. So it could halt rail traffic. Again, this is a period of the year where a very large spring wheat crop is coming on the market, not only here in the upper plains of the United States, but in the prairies of Canada. Also, corn and soybean harvest is right around the corner as well. So potentially a big issue, especially for Canadian producers. The expectation, or the railroads have announced, that this shouldn't have an impact in their operations in the United States and Mexico. However, there could be some spillover effects of not being able to get rail cars out of Canada into the United States, or vice versa. Maybe even some shuffling of some workers along the border as well. So a potential big deal that could impact the grain markets, given how big of an exporter Canada is in wheats.
Exactly. So mostly maybe impacting the wheat market there, and capitalizing, or well, not capitalizing, but maybe being the biggest issue for those domestic producers up in Canada. So Ben, looking domestically here in the U.S., once again, we're looking at some low Mississippi River levels in the kind of the southeast area or southern central areas, as we're looking at those places going into harvest. So the monitor that you've added to your write-up this week, it shows low levels again coming to Memphis, Tennessee as one of those choke points. So how big of an impact will this have along barge traffic during harvest season?
Yeah, so the forecast out to Labor Day, so September 3rd, is a -4 feet. It's kind of weird how, I shouldn't say weird, but it's interesting how water level is measured. Basically, there's an adequate level for river transportation. You get too far over that, you have flooding, and it stops the network, right? You can't send barges and other freights down the river when it's flooded, but you also can't do it when it's too low. And so when you start getting those minus levels, two things happen. We either see barges completely stop, or for grains, a lot of times what happens is they start light loading those barges. And of course, that increases anytime you shrink the number of bushels, that increases the cost per bushel per mile or transit there. The expectation is that the river is going to fall to -4 feet by September 3rd. That compares to just -5 feet, not that long, a year ago. We were also looking at -11 feet at one point in 2023. So certainly not as low of river levels as what we saw the last 2 years, but low, and getting lower, I guess, or moving lower, I guess is how I would put it. As we look ahead, it could have an impact on basis levels, especially for crops that are really dependent on those export markets out of New Orleans.
Well, and Ben, I'm no meteorologist or river infrastructure guru, but I'd assume, to maybe fix that or alleviate some of that, we need a fairly substantial amount of rainfall, in the northern Mississippi River Basin portions, just to alleviate some of that. So I guess a little watch on weather there. But Ben, moving elsewhere, we got some more record numbers out of the NOPA, the National Oilseed Processors Association, for crush numbers for July, which was even above what USDA was predicting. So it's, I believe, up 5% year over year at this point, with just a little bit of time left in that calendar year for them. So give us a snapshot on what this means for that soybean complex.
Yeah, so I mean, the soybean crush market has really been a strong point of U.S. soybean demand. I kind of categorize this in two things. Yes, it's breaking monthly records. We saw another monthly record go down this past July. So I think that's now 10 out of the past 12 months we've set a new monthly record. The only 2 months being December, and I believe December of last year and April of this year, I believe, are our 2 months where we did not set a new record. However, while it has been strong, the expectations were that it would be strong, and there was a lot of investment into this industry. Not surprising to see crush volumes where they're at. However, one of the things that I think has been elusive, maybe at different times this year, has been the use of soybean oil. There's been times this past calendar year where soybean oil stocks have built when we would have anticipated them to decline due to strong use, and maybe use wasn't quite there at that particular time. July was a very strong month for soybean oil use. In fact, we think it was a record volume for any month, not just July. And so that to me is a positive when we think about the soybean crush market. Is not just because we're crushing a lot of soybeans, but now we're starting to see a little bit more consistent soybean oil use. And that includes exports. Soybean oil exports have also picked up a little bit relative to where we thought they were going to be just a couple of months ago.
Well, just as a general positive, maybe finding a little bit of support there as a leveling factor. But Ben, moving forward into the rest of this week, we've been talking the last several weeks. There's been just a light level of news to trade on. And this week, it seems like it's been pretty news heavy comparatively. So Ben, looking forward to the rest of this week, what's it look like for ranchers and farmers?
Yeah, so a couple of key economic reports coming out from the macroeconomy side. First, on Wednesday of this week, we're going to get minutes from the Federal Reserve's July Open Market Committee meeting. As a reminder, they did not adjust interest rates during that meeting, but kind of teed up a little bit for an interest rate cut in September. These minutes will be important because it'll give us indication of just how close some of the committee members were to cutting rates in July. And so, my expectation is a quarter point cut in September. Given the day, the market's been budgeting in 50 basis point cuts at some point, but I think it'll be a quarter of a rate cut in September here. The other key economic kind of news coming out on Friday will be Fed Chair Jerome Powell is going to speak at the Jackson Hole Economic Summit. This is kind of that retreat every year where people flock to Wyoming to do an economic summit. It's very closely watched by the market. They'll be very interested to see what Jerome Powell has to say. So those are kind of the big macroeconomic numbers. On the crop and grain side, or the grain and oilseed side, we will continue to watch numbers come from that pro farmer crop tour that's happening across the country this week, and not how those numbers necessarily relate to USDA, but how they relate to pro farmers tour last year, and maybe even a little bit of the direction and magnitude compared to USDA. We saw those magnitudes play a big role in Monday of this week, as we talked at the top of the show. And I think that'll continue as we move forward.
Well, Ben, it's always fun for a day when the nation's economic focus might not sit in New York or Chicago, but rather in the middle of Wyoming. It's always fun. Looking forward, farmers and ranchers, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.